So, have you been wondering why the bank all of a sudden is just trying to throw money at you? I keep getting solicitations now via text, not just phone, email, and mail, but now they're just text messaging me, hey, do you need funding? Would you like to borrow money for this, for that, get a new mortgage, cash out refi? All of these things. Now, I don't know about you, but I don't feel like this is one of those times that, the beginning of a recession where I should take out more credit. But let's talk about some of those different loan types, maybe some things we haven't seen in a while, maybe the pros and the cons of those, and then obviously we are here to answer any of your questions that you might have. Hi, I'm Rhonda with Covey and Shepherd Realtors here in Cincinnati, Ohio. We are finally, now that the market has started to calm down a little bit, we have started to see loan types from all different types of lenders, things where they will buy your house for cash, like as in they will help you purchase your new home with cash, and then you finance it like a regular loan on the back end, but you have to pay like 1% up front to get the cash. So I don't know. There's all kinds of these types of programs because they want to put people in the driver's seat and give you the opportunity to get the house so that they can finance your loan. So I find it interesting that they all waited a year and a half to get, actually more than that, 2 years almost of crazy market and 20 offers on this and 30 offers on that before they started coming up with these things. And now that we are kind of in that weird transition stage, I don't know that we really need those things anymore. Again, if there's a property that's like super hot, a once in a lifetime property, maybe. Like there's nothing else like it. It's unique, and you are probably not going to see anything like it in the next, 5 years. In that case, I would maybe spend the extra 1% to be more competitive. But there are a lot of parameters that go along with those types of loans. And so you have to qualify like super strong, because you still have your house payment. You're not going to sell your house first. They're going to give you the cash to buy the new house. And there's some sort of, contract you have with them for so many days to get your house on the market and get it sold. It just all makes me a little bit queasy. I don't like it. But I'm a very conservative person, and financially especially, like I just don't want to put myself in a position where if something went sideways, I'm now stuck with 2 houses and 2 house payments. The second thing that we are seeing more of right now are blanket loans, bridge loans, whatever you want to call them. The lenders that do them, there's only so many of them, but they are usually those folks that also do a lot of refinancing, and they're kind of bored right now. So they can get your blanket loan done at a cheaper rate than a regular mortgage, and they can get it done faster than normal, and they can get it done at a lower interest rate. Make it so you have 20% equity in both houses, and then you finance whatever's left. So whatever you owe on the first house, and then whatever is left on the second house. And that becomes one big payment. So again, like a little bit challenging unless you know like your house is amazing and you can turn around and get it on the market quickly. And you want to have a lot of equity in your house before you do something like this, because if something would go sideways again and you would have to sell it for less than you think it's worth, like you just need some space in there to make sure that you have the ability to do that. But blanket loans can be great because it does allow you to, again, purchase the new house without selling the current house, which if your current house is either filled with stuff or needs some work, like sometimes it's a good idea to just give yourself a minute and, you know, get that all done and not feel rushed. Loan type number 3, and this is one we have not seen in a while, but it is an assumable VA mortgage. We're in a market, you know, where interest rates have gone up. So if you have a VA mortgage from a while ago and you're locked in at 2 to 3, 3.5, even 4%, you may be able to actually sell the house, get the person qualified to assume that lower interest rate mortgage, and then they would pay the difference. They can either get a loan to go on top, or if they have cash or, you know, whatever, to pay the difference. Bing, bam, boom, nice and easy. Now, the process is easy. The problem is that it doesn't really do the bank any good. They had a loan on the property. Now they got to do a bunch of paperwork to put somebody else's name on it. Not something that they're super excited about doing. The bank is just not motivated to do those. But if you have one, it's a really great tool when you go to sell. Yeah, I've got a VA assumable for X amount, and here is the interest rate. And it's usually way less than what the current interest rate is. So people like that a lot. So lastly, HELOC, or a home equity line of credit. So these have been around forever and ever and ever. They are a little bit easier to get than some other types of loans. And when you compare a HELOC versus like a credit card, the rates are always way better. A lot of people end up using them as like their credit cards. They use it to buy a car, pay for vacation, do some house fix up. Truly, the only thing that makes sense is to do repairs on your house. Whether it's a roof, you're adding on, you're putting in a pool, that kind of stuff like makes sense. But don't pay for everything that, you know, like don't do debt consolidation and then put it in your house, because now you owe all this money on your house. And yes, it's at a good rate of interest. But what if the market does go down and you now have this really high amount that you owe on your house? If you have to try to sell it, now you're stuck with all this debt. So I get where people are coming from, but it is part of the reason that we had issues back in 2008 is because everybody did this. They just used their house as a cash machine. And so highly recommend that if you are going to use it, you use it for home improvements. All right. Hope that helps. And if you have questions, we would love to chat with you. Remember to like, share, and subscribe, and we'll see you next time.